All right, November is here, and the crypto market is sending some seriously mixed signals. I mean, on one hand, Bitcoin is hanging in there after a pretty wild October. But the real story, the one we need to unpack, is this great divergence happening right under the surface. It's like a tale of two completely different markets. Let's get into it. And we have to start with the headline that's got everyone talking. Wow. In just a single day, spot Bitcoin ETFs saw a net outflow of almost $290 million. Just gone. That's a huge amount of institutional money heading for the exits, and it's creating a massive headwind, short term. So you see a number like that, and it begs the question, right? Is this it? Is the bull run hitting a wall? Or is all that money just finding a new, maybe faster, lane to drive in? That's what we're going to figure out.
So first, let's really dig into what's going on with Bitcoin, because you can't ignore this. This institutional pressure is the big red flag waving right now.
A number like this, it's a huge deal. This isn't just a little dip. We're talking about a massive institutional retreat. When nearly $300 million leaves these regulated ETF products in one go, it puts direct, immediate selling pressure on Bitcoin's price. It's as simple as that. And you know that chill from the big institutions? It's starting to bleed over into the rest of the market. The Fear and Greed Index just tipped into fear, all the way down at 37. And what that tells you is that the everyday trader, the retail folks, they're starting to get nervous. And that creates this really cautious vibe everywhere. But there's always another side to the story, isn't there? You've heard the saying, buy when there's blood in the streets. Well, experts like Scott Besson are basically saying just that this exact level of fear might be a golden opportunity, a strategic entry point for anyone with a long-term plan. It's a classic contrarian move. And this quote from Fidelity Digital Assets, man, it just hits the nail on the head. They're warning that we're now in the final acceleration phase. Now, that doesn't mean a smooth ride up. It means buckle up. We should all be bracing for some extreme, and I really do mean extreme, price swings in both directions. Okay, so that's the Bitcoin side of the story. Now we have to flip the coin, because while all of that is happening, a completely different story is playing out in the altcoin market. We're seeing a massive rotation of capital. I mean, just look at this. It's night and day. On one side, you've got the Bitcoin ETF exodus we just talked about, but on the other, Solana ETFs are just quietly stacking up 4 straight days of inflows. So here's the kicker. The money isn't leaving crypto. It's just being moved around. And this isn't random. There are real, tangible reasons this money is moving. Solana is clearly the darling of the institutions right now, just sucking in that consistent ETF money. At the same time, the hype for a spot XRP ETF is getting very, very real now that Bitwise has filed its final paperwork. And then you have the Flare ecosystem getting this major shot in the arm with its own ETF filing. This is all about news-driven momentum. But, okay, we have Bitcoin pressure, we have altcoin momentum, but there's this one giant storm cloud on the horizon that could just throw a wrench in everything for everybody. And that's the absolute gridlock we're seeing in the US regulatory world. And I'm not just guessing here. This is straight from the horse's mouth. This is a direct statement from the CFTC. Because of the US government shutdown, they've had to, and I quote, curtail their operations. That means one of the main crypto cops is basically off the beat right now. And you can see how this creates a really dangerous domino effect, right? The government shuts down, which means crucial bills for things like stablecoins get stuck. It means huge questions about Ethereum and DeFi are left just hanging in the air. The entire market is trapped in this regulatory limbo, and that's a huge risk. But with all that regulatory mess, it is so important to zoom out for a second and remember the big picture. The long-term trends are still chugging along. Stablecoin demand is absolutely massive, and big banks are jumping into tokenizing real-world assets. These fundamental pillars of growth are still incredibly strong. So, that's the lay of the land. What in the world are you supposed to do about it? How do you navigate a market getting pulled in 2 different directions? Let's talk strategy. Okay, if you're watching the markets, there are 2 key things you absolutely need to have on your screen right now. First is Bitcoin dominance. It's testing a really critical resistance level. If it gets rejected there, that could be the big confirmation that an altcoin season is truly kicking off. And second, you have to watch those ETF flows. Is this institutional selling going to continue, or does it flip in the next 48 hours? So, based on all that, here are 3 things you might want to consider. First, protect your capital. Seriously, with this kind of volatility, tight stop losses are not optional, they're essential. Second, ease up on the leverage. This is probably not the environment for risky, high leverage plays. And third, think about allocating to the catalysts. Following the money toward assets like SOL and XRP, which have clear momentum, could be a smart move.
So to wrap it all up, here's the takeaway. In the short term, expect more of this choppy sideways action and a whole lot of volatility. The main theme right now is this rotation of money out of Bitcoin and into a handful of altcoins with strong stories. For the next 24 hours, here's your homework. Keep an eye on any news about the US government shutdown. That's the big macro risk. And watch that end-of-day data for the Solana and Bitcoin ETFs to see if this whole divergent story continues. Which leaves us with this one final, massive question. Can we really get a full-blown roaring alt season led by coins like Solana while the king, Bitcoin, is watching its institutional support get shaky? That is the billion-dollar question for November. I'd love to know what you think.